Hello, everybody, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today we've got Steve. How you doing, Steve?
I'm good, Ollie. What about yourself?
All right, all the better now that Seabold is not the Manly coach, but we're not here to focus on that. Let's move into the video ahead. For any of our returning viewers or older viewers, this will all look quite familiar, but just want to reiterate to everybody that everything we do discuss in this video is general in nature and doesn't take into account your circumstances. Any projections Steve or I give are not guaranteed, and past performance is not always a reliable indicator for future performance. So, moving into the top 10 traded products for last week. I think interesting that USD denominated across all of the markets in there, but how about you, Steve? Any surprises?
No real surprise, especially with oil. There's only one oil pairing. It's futures based, but yeah, just getting into last week, we didn't have too much that really moved the market too much overall, considering the main sort of headlines. So we did have the Aussie at home, the CPI, so Consumer Price Index, which was lower than expected, but still above that 2 to 3% band that the RBA wants to see. So they look at the trim mean, which was 3.3%. And there's obviously the uncertainty around the March print. So that next of release date is the 29th of April, 2026. So we've still got, just around a month until that data release, and then the May sort of decision on the 5th of May. So interesting also to see with a lot of, other than the CPI data, we saw a lot of the PMI data, especially the manufacturing and services. So we saw the Australian actually be the anomaly compared to global. So especially with the manufacturing not having that sort of upward trend, so weaker than expected compared to Eurozone, Germany, UK, and US, which had stronger manufacturing while the services was weaker for each of the economies. We did also see the daylight savings during the clock over, so that's a bit of an adjustment. Again, we spoke with that when it comes to our previous videos in regards to the adjustment, and be wary that we've also got the adjustment locally, so where we put the clocks back, so it'll be a bit of a contrast. We Most of last week was early on the week, especially with gold, we saw it try to break that 41,000 mark, and just really range bound by significance of wides of range. A lot of it was driven in regards to the Fed member speeches. So we had Fed member speeches really around, the inflation concerns around the Iran sort of conflict at the moment, as well as the expectations of the sort of next rate. So it could be the actual end of the easing cycle, with the inflation sort of concerns. We did have Stephen Moran come out and actually say that that we should be, that from the US perspective, they should be reducing the balance sheet. So having that sort of dovish sort of speech. But yeah, it was really around the US Iran updates. We did see Trump actually come out with the deadline, which was 5 days. That was extended to 10. So we've now got the 6th of April. But a lot of talk out that sort of updates when it comes to different sort of points. And there was a lot of hope throughout the week around markets. But overall, we saw the fifth consecutive week when it comes to losses on the US indices. And yeah, a lot of uncertainty. Yeah, Holly, what were your thoughts about last week?
I mean, the comments from Miran, I'm not surprised about. Everyone kind of knows his side of the coin on that, but I think we saw Fed member Cook was really hawkish in the comments. So, I mean, we've seen it contribute to a stronger dollar, which has been across the board, but that's mostly off the back of the oil prices. But I actually did want to ask you as well, because we didn't include this one on the slides about the Clarity Act. I believe there was a delay in that.
Yeah, so a good point, Ollie. So the Clarity Act, yeah, there was actually a bit of a delay. So they're still trying to work out within the Senate to really clear that, and that's really around the yield. But there have been some people coming out and just actually mentioning that they're looking at maybe hopefully by the end of April. So it's kind of delayed for a month. There are concerns that if there is no resolution when it comes to the Clarity Act, that could actually roll on to next year. So, especially when it comes to everyone in crypto, looking out for that sort of clarification. So the SEC, as well as the commodity futures, have already come out and defined crypto, but yeah, the Clarity Act is one big sort of driver. So we'll see how that pans out. This week we do have a lot of sort of data. It's mainly US heavy, but we will also see Japan when it comes to the retail sales as well as the unemployment rate and CPI, which is the Tokyo CPI. So that's more of a smaller sort of CPI gauge. But the unemployment rate as well as the sales will really show how the economy is going.
Yeah, I
And
think that data is meant
yeah,
to directly impact the next BOJ meeting as well. Then the next
yeah.
BOJ is towards the end of April. So that data should directly impact it, but to be seen about the immediate price reaction is probably more going to be based on the yen rather than the data.
Yeah, I mean, with the decision, it's going to impact obviously what we've discussed quite at length around the yen carry trades, and especially how that impacts US bonds and treasuries as well as stocks for indices. We've got also the China data. So China, not only just the manufacturing and servicing PMIs, we've also got the rating dog. So we've mentioned about previously that the rating dog is the smallest of companies, while the normal manufacturing services are the biggest sort of companies. So we should get a gauge to kind of round out a lot of the PMIs that we did get last week from a lot of the more Western countries. We've got the Eurozone, the CPI, so it will be good to see how that sort of pans out. But a lot of the US heavy data, especially starting the week with Fed Chair Jerome Powell is actually speaking. So that's really probably going to be a bit of a driver for this week, and we'll see how that speech actually impacts the markets, the likes of, for example, indices as well as gold, those sort of safe haven flows, and those other sort of currencies which are safe haven flows. So we do have a lot of the retail sales. We've got the jolts, we've got the ADP non-farm, as well as the ongoing sort of jobless claims, the unemployment rates, as well as the non-farm employment change. So very US heavy data. So we should see also the reaction of how that actually has on the US dollar, so the DXY. We also have a, a lot of the public holidays. So we've got Good Friday as well as Easter Monday. Good Friday will impact a lot of the more Western countries as well as some other countries. But we've also got the Australian daylight savings, like what we mentioned earlier. Any sort of other sort of events you can think of, Ollie?
Not too much in terms of the events, but for the Good Friday public holidays as well as Easter Monday, I believe we do have a calendar up on our website which clarifies which markets are open and not. Otherwise, if you have any questions about those, reach out to Steve or I directly or post in the VIP chat room as well. If you have any questions, love to clarify that. As well for Easter Monday, we won't be here on Monday. So just remember that for all of our Monday Open viewers who do like to watch it live. But for the moment, I'll move into the technicals. So I do see it quite fitting given that we do have a lot of US data coming out this week. So I thought it might be good to focus on the US dollar index. So starting out on the weekly chart for the US dollar index or the USDX as it is otherwise known on Vantage. We can see that prices were largely range bound throughout last year between the 96 to 100 USD range. Right now, we are trading into the top of that range as well. So I'm looking to see if we are likely to break resistance at the top part of that range and push higher, or if we are going to hold and respect that resistance to move lower in. If we look on our technical indicators now, so we are seeing that the MACD is above its signal line. We can see it has created some divergence, but not too much. So if I am bullish on this, I would like to see a bit more divergence in the MACD to support the momentum. Similarly, on the RSI, we are above our signal line, but it does look like they are converging somewhat. So Again, I'm waiting for some divergence on that to act as a firm signal for this. You can see out our moving averages, they are all fanned out. They are all looking like they are going quite horizontal. So it's telling me that we could be looking for a breakout here, but I'm looking for some signals on that. You see, most recent price action, we did see the 20, 50, and 100 week moving averages cross below the 200, which historically does act as a bearish indicator. But again, I want to get a bit of an idea to see what is more likely to happen throughout the day. So for this one, I'm going to shift into the dash for the US dollar index. So where we are sitting again, as I said, we can see right now we are trading at the top of this range. We have had a couple or a few tests and failures to hold and close above 100 here, and we've since then come back down, trade into the moving averages. Most recent price action, though. So essentially, from since the end of January, we have seen a pretty strong bullish trend. You can see prices have been quite consistently above the 20-day moving average, on coming down to find support at this moving average level on a multiple of occasions over the past 2 months. So for the prices here, I want to see a break and hold above 100 to confirm the bullish bias. Or similarly, if we do trade down for the day, I want to see it find support above the 20-day moving average, which would then add to a sequence of higher lows alongside higher highs. Again, if I am a buyer in this market, I actually would like to see the prices come down and find support at the prior resistance from early March, which does add to the bullish signals. And here, where I'll be looking to target its next key levels. If we do see a break above 100, we could see it then look to do a retest of the last 12 months high, which is at around the 100.5. And a break above that, we could see it then move to its next key levels. If I'm a seller in this market, however, I would like to see a break below the 20-day moving average and a look to retest its most recent swing lows, which would be breaking the sequence of higher lows and higher highs. So if I do see that one, I'll be looking to target with the move lower into the range, potentially back towards its moving average levels. If we want to look at our indicators for a bit of support on here, we can see the MACD has crossed over its signal line, but only just about as of today. So I want to see some divergence to add to that one, to add to the signals. RSI has given us a conflicting view on this, so definitely one to watch for the week ahead. Now, the next market I wanted to take a look at is the S&P 500. I'll move this one back to the weekly chart as well. So throughout last year, it was pretty well documented. We were in a pretty strong bullish trend since April. We saw multiple all-time highs on the S&P 500, actually quite consistently throughout the tail end of 2025. Reached an all-time high in late Jan, and we've had a very sizable sell-off since. If we look at the most recent price action, I'm seeing we're currently in the middle of the so 5 consecutive down weeks. The first time, I think, in very recent history or very near-term history, if it's ever been done before. And I'm finding these top wicks on these candles quite significant as well. It's telling me that when prices do look to find support and look to retest the highs from last week, it's finding a lot of selling pressure. So it's telling me that we are in a pretty strong free fall at the moment. So I want to get an idea of what we can expect for the week ahead. If we look on our technical indicators, we can see the MACD is below its signal line, and we've got some pretty sizable divergence in this, which is adding to the bearish pressure, and this is also shared by our RSI. So moving now into the daily chart for the S&P 500. So we can see the near-term bearish trend. We can see it's quite clearly signified by a sequence of the lower lows and lower highs. We can see it actually has been quite fair on that sort of trend where we're seeing a break below support, to find new support, come up, find resistance at its price support, and then go on to make a lower low. That's actually happened quite consistently across March this year. So I want to get an idea of if this is likely to happen again. For the session starting so far, we are slightly up. I think if we continue to see the prices move higher, I think if we find resistance at its price support around the 6,500, we could then see prices move lower to retest its lower lows and then move down to its next key levels. Similarly, if we see prices break resistance around here, we could see it trade further into its moving average level. So I'm looking for a confirmation on either side. I think if I want to manage my risk on either side of this as well, I'm looking at these key support and resistance levels as an area to manage my risk in here. Otherwise, if you are looking bullish as well, you can look towards your moving average levels. For the moving average as well, I think more recent term it is bearish. I'm seeing that the 20-day moving average has crossed over its 50 and 100 and is looking like it's likely to break below its 200-day moving average in the short term. So again, ones to watch for this one here. All right, so that brings us to the end of the technical section now. So moving into the Q&As. Steve, would you like to take for
Yeah,
question
so
one?
question one is what is the difference between Brent and WT oil? So just to clarify, Brent oil, as well as WTI, which actually stands for West Texas Intermediate. So Brent oil, I'll start with that, but basically that comes from the North Sea. It's the main global benchmark, so used to price the world's oils. It prices about 2/3 of the world's oil. It's also dependent on the OPEC Plus decisions. So when it comes to the supply and demand, there's also the geopolitical events, so Middle East as well as shipping routes, which are impacted. It's usually priced higher compared to WTI. For example, it's also easily shipped by sea, so it also reflects that sort of global supply and demand via sea. With the WTI, it actually comes from the US, so Texas, as per the name, but that just benchmarks for the US market. It's slightly higher quality, so lighter and sweeter. The landlocks of pipeline is dependent on the infrastructure, so can be cheap at times. There is also discounts that apply to that. It is also dependent on the US crude inventories. So higher US inventories is generally bearish for WTI, so prices tend to fall, or otherwise lower US inventories is bullish for WTI, so prices tend to rise. But yeah, those are the main sort of differences. So that's why you can see that sometimes the Brent and WTI doesn't necessarily correlate.
Thank you. And I'll take for question two. So, what can it mean when markets trade in a tight range? So, when markets are in a tight range, it generally means that prices are bouncing between an established support and a firm resistance with low liquidity. So, easiest example of this at the moment is Bitcoin, which has been ranging between 64K and 74K, I believe, for coming on pretty much the entire month now. So, what this indicates is a balance of power between the buyers and the sellers, often signaling a consolidation period before a potential breakout. So, traders can look for a high volume break outside of the range as a potential signal for a new trend, where the support and resistance levels can act as defined points for risk management. Again, though, as I've said in the intro, that previous price action won't always be a reliable indicator for future movements. So definitely, if you are looking for this sort of range or this sort of strategy, is worthwhile using that as a signal or add to a cluster of signals for movement. So that brings us to the end of the video today. So a recording of this one will be uploaded on YouTube once we have concluded. As well, we will be uploading a link for this one in our VIP chat room as well as on Telegram. I keep saying as well, for anybody who's looking to get involved with the Monday Open, please feel free to send your questions through to Steve or I directly or reach out in any of our channels. As well, we just wanted to wish a happy Easter for everybody as well from us here at Vantage. I hope everybody does enjoy the public holidays off for those living local in Sydney. And yeah, going to chat to you guys all next, this week or next week once we're back.
Thank you, Ellie.